Hi there, welcome to Kneppy Invest and welcome to October the 2nd, 2024. We have about 1 hour and 6 minutes left of trading today. And overall, today has been slightly negative apart from energy and mining as well. Now, not surprising that energy has had a good day today because of increased tensions in the Middle East. So a pretty good day for oil companies, Karoon, Santos, maybe even Woodside. A good day for uranium, I do expect as well. And a pretty bad day for tech. In fact, all tech down 0.92%. And the reason behind that is because the NASDAQ was down 1.4% overnight, and we've just taken their lead. Now, the agenda for today's video will very similar than other videos. We'll go through the best and worst performing sectors, indices, and also companies. Then I'll talk about the top five stocks of the day. In fact, it's not five, it's about 8, because I have lumped, actually it would be 7. I have lumped 3 companies together in at number 4 because they all have a similar theme. So I thought, why not talk about these 3 companies together? 3 of the other top 5 stocks today did release positive announcements, and I do expect the share prices of these 3 companies to be up right now. And the other company coming in number 5 is just a company that released a trading update. Not sure if the share price is up or down, but I do like trading updates. And then if I do have time, we'll go through some charts and some of your comments. Okay, so let's get stuck into the ASX today. Now, first, anything happened or happening in the world of trading economics? So oil extends rally on Middle East conflict. Yes, we knew that. I did have a feeling that Hang Seng was on a break today, some sort of holiday, but just mentions here, Hong Kong stocks rally after Tuesday break. South Korea inflation hits lowest since early 2021. US job openings beat expectations. US factory activity continues to shrink, and Euro area inflation falls to 1.8%. Now let's have a look at the ASX today in terms of the best performing sectors and indices. And no surprise to see energy up 2.15%. I do expect or suspect that Karoon Energy has had a pretty good day. Let's have a look. So up 7%, not surprising there. I don't think Santos has rallied as much as that, only up 2.6%. But if you do have a look at the oil companies, most of those oil companies should be up fairly nicely today. And just behind energy by a fair bit is utilities, up 0.73%, and materials up 0.71%. Gold's had a pretty good day as well, up 0.78%. Now, all the other sectors are down. Financials down just a little bit. Healthcare, real estate, industrials all down by less than 0.5%. But a pretty nasty day, or just a bad day for telecommunication, staples, IT, and discretionary. Not sure what's happening with discretionary. So because I'm not sure, I am a bit curious. Why is discretionary down a fair bit? I can understand IT. I can understand why energy's up. So why is discretionary down? Now, we did see retail numbers released yesterday, and it was a good month in August. But something's driven this particular sector down. What has it been? So we don't see any company down big, but Wesfarmers down 2%. Aristocrat down 1.5%. JB Hi-Fi down 1%. Flight Centre down 2.7%, Guzmani Gomez down 2.8%, Premium Investments up slightly. So there is a sea of red among these companies, and that explains it. Corporate Travel Management. So quite a few travel companies down, I noticed. So Corporate Travel Management, Web Travel Group, was the other one I just mentioned, Flight Centre. But yeah, not much good news within the consumer discretionary. Okay, so let's go back to the indices. So resources and gold up. Every other indice looks like it's down. Now I'm just going to focus my attention on the ASX 20, down slightly, 0.12%. I do assume, because financials is down slightly, banks is down slightly, I'm assuming that, actually, in fact, I have no idea what's happened with iron ore. I'm assuming iron ore companies are up today slightly. So BHP, Rio Tinto, Fortescue up slightly. Some of the banks are down, some of the banks are up. And then some of those other big sort of discretionary and staples are down. So I'm going to say 8 companies up, 12 down. Oh, close. 7 up, 13 down. And let's have a look at the best performing companies in the ASX 20. We have Woodside, Fortescue, BHP, Rio Tinto. So iron ores had a better day than I expected, but you can see a similar theme among those top four. QB Insurance, for some reason, is there as well, alongside Transurban and Goodman Group. And that's it. And if we look at the worst performing companies, Wesfarmers, WiseTech, Woolworths, Aristocrat, Macquarie, Telstra. And then we get to CSL down 0.42%. But CSL went ex-dividend recently. Was it today or yesterday? It went ex-dividend. Oh, it's going ex-dividend in a week. No, it went ex-dividend a month ago. For some reason, I thought CSL went ex-dividend today. They're getting paid. Oh, it's payday. We get the pay. We get the dividend today. That's what I was thinking of. It wasn't ex-dividend. We get the CSL dividend today if we do own some CSL shares, and we were holding CSL before the ex-dividend date. Okay, my mistake. Okay, so let's have a look at the worst and best performing companies on the ASX today. We'll start off with the top gainers, and at the top here is a company called the Hydration Pharmaceuticals company. Funny enough, I have tried one of their products. Market up of 6.71%, share price up 144%, and this company is my stock of the day. I could ignore the share price increase like that, and the announcement wasn't that bad. Well, that's stupid because it was pretty good. If the share price is up 144%, it's pretty good. And I do have a question whether the share price should have risen by more than 144%. So I'll mention Hydration Pharmaceuticals company towards the end of the video when we look at the top stock of the day. 5E Advanced Materials up 47%. Ascari Metals up 45%, both on pretty good turnover. I'm just going to have a quick look at both of these companies. I don't remember any announcements today. I have a feeling 5E Advanced released something yesterday. Was it yesterday? Yeah, yesterday. Exim Bank issues letter of intent for $285 million debt financing, and the share price did increase 14.9% yesterday, up 47% today. Sort of like a delayed reaction, and pretty good volume both days. Let's have a look at this chart. So this is financing. I'm not going to have a closer look at the announcement. So just have a look at the chart for this company. 5EA, I don't know much about 5E Advanced Materials. And just based off this long-term chart, it's been a downtrend for quite a while. And even though the share price has rallied on pretty good volume the last 2 days, doesn't mean the downtrend has come to an end. In fact, you can see in the past, for instance, on the 28th of February this year, share price rallied 42% in one day, and that was it. Then the share price fell the next day and continued to fall. And on occasion, we do see these rallies, short-term rallies in this company's share price. But share price has been in long-term downtrend for almost since it listed on the ASX back in 2022. Okay, the other company was Ascari Metals, AS2. This is probably another recent listing on the ASX. Share price up 63.6%. Surely this company did release something today. And it did. Strategic review identifies significant gold mineralization. Really? That's interesting. Strategic review. So weird. I just find this title of this announcement weird. Strategic review. So they had to go through this review to understand they had pretty significant gold mineralization. Okay, so whatever floats the market's boat. They've liked this announcement. I'm not going to, in fact, have a look at this announcement. I'm just going to have a look at the chart for Ascari. What's it called? Ascari Metals. I'm assuming this. Yeah, I was going to say I'm assuming the share price of this company has been a downtrend as well, and didn't disappoint. And in fact, this company listed back in 2021, and you can see a couple of periods here back in 2022 and 2023 when there was a bit of excitement in this company. In fact, in 2022, share price rallied from about 15 cents to above 75 cents. So that's a nice little fire bag in a fairly short period of time. And there was another period in 2023 where the share price rallied as well. But since then, share price has dropped a lot. Now, the volume today has been quite high. And we have seen some spikes in volume over the past 5 months. In fact, if you look at the volume since April, there's been a heightened increase, a significant increase in volume compared to the previous 10 months or so. So that does tell me that there is someone in the market taking positions in this company. but share price hasn't really gone on any significant rally. Very short-term rallies, we've seen a few of those, and this could be the start of another short-term rally. Now, maybe the low is in. That's all I can say. Maybe the low is in. I am going to put this company into my high volume spec. In fact, I should have put the other company as well into my high volume spec. What I'm doing here is I'm going to have a look at this high volume spec watch lists, and I'm going to look for patterns, because a lot of companies have similar patterns. Share price in a downtrend, they release an interesting announcement, share price pops up, but sometimes share price rallies from there. It moves into a new uptrend. And most of the time it doesn't. Most of the time it falls back. So I want to find some sort of pattern where we can increase our probability of success by trading those sort of situations. I would assume my research on this particular topic might go on for quite a while. Anyway, anything else here of note? Serial Resources up 23.53%. Now, the share price of this company has been in a long-term downtrend. Did they release anything today? No. No, nothing of note. So let's have a quick look at Serial Resources chart. Is this a reason to get excited? No, I'm not there quite yet. And just like other companies, you can see when the share price of a company is in a downtrend, on occasion, you will see the market get excited. For Serial Resources, back in October last year, in fact, the 23rd of October, share price rallied 41.5%, rallied for about 2 weeks after that, not much, but that was it. And then the share price started to decrease, and the share price is, in fact, significantly lower now than it was back then. So this doesn't get me excited just yet. In fact, the volume is quite low, or has been quite low. And the other fact is they have not released anything to justify this type of move. Now something might be happening with graphite. Maybe graphite prices are increasing. I don't know. But that could be it. That could be the reason. Now, just below Serial Resources, we have archTIS. Share price up 22%. And archTIS is in my top 5 stocks of the day, so we can move on, talk about that company a little bit later. I did talk about Orbital Corporation yesterday. Share price rallied, and it's rallied again. I'm going to have a quick look at this chart. Just got a quick look, because yesterday I wasn't convinced. Even today, I'm not convinced. This could be just a 2-day rally, maybe even a 3 or 4-day rally, and then the share price more than likely will pull back. Now, I am almost at the point where I would say that 7.5 cents is a bottom for this company's share price. Now, the other thing to note is the volume has been quite weak today. Even yesterday was fairly small. I would prefer a little bit higher volume, and there is a bit of resistance moving forward for Orbital Corporation, but a nice 2-day move for that company. Now let's have a look at the top gainers by market cap. Sigma Healthcare on another rally today. I'm not sure about that. Karoon Energy, no surprise there. So no surprises here. Some of these companies have rallied quite nicely. In fact, BrainChip has gone on a nice, was it 3 or 4-day rally? Let's have a look at BrainChip. Yep. Oh, so like a 4-day rally. 4-day rally. Share price has increased from about 15 cents to 27 cents. But you can see, on occasion, there is excitement in this company. And the last time was in February, when the share price went from 15 cents to 52 cents and then pulled all the way back to 15 cents. So this would be a bit of a plaything for day traders. I'm not sure if the company has released anything. I doubt it. So just a bit of short-term sentiment. Yep, bit of short-term sentiment when it comes to BrainChip. And Novonix, pretty good day. 29 metals, that's copper. Peninsula, so that's the uranium. And lithium. Findi, up 7%. This is another company that made it in my top 5 stocks of the day. So I've already mentioned that hydration pharmaceutical one, archTIS, and now Findi. In fact, those are 3 companies that are in the top, or took the top 3 spots in the stocks of the day. Copper, Aries Resources, Calix, Demerix, Bigtincan. Now, Bigtincan almost made it into my top 5 stocks today, but I just thought, nah, it's a takeover bid. No interest. Sort of a takeover bid, but I'll discuss that company and that announcement briefly in a second or so. Now on to the top losers for today. And you never want to see one of your companies in this list. And I'm looking down this and I'm not seeing any companies. Now, Narada down 14%, but this company did almost make it into my top 5 of stocks yesterday. So just a bit of profit taking, I would assume. And other than that, nothing of significant note here. Yeah, nothing of any interest. Boring when it comes to the top losers. Now let's have a look by market cap. Hopefully there's some bigger companies that are down. So you have Webjet Group, Travel, and even looking at this list of companies by market cap, nothing of note. In fact, you can see the biggest company within this list is Webjet Group at a market cap of 340 million. And that's the only company with a market cap above 150. So fairly quiet day when it comes to bad news for ASX companies. So not much to chat about here, to be honest with you. Even City Chic has a market cap of 47 million now. Wow, 47 million. Now, let's get to the top 5 stocks of the day. But before that, I'm just going to briefly mention Bigtincan. Now, this has been, I would say, and describe Bigtincan as a disastrous story over the past few years, particularly because they knocked back a takeover offer at 80 cents over a year ago, and that looks pretty sweet when you see the share price at 20 cents. Now, share price not that long ago was about 10 cents, but there has been a couple of takeover bids. Now, this is a weird one. Receipt of non-binding business combination proposal. So not really a takeover. So this other company listed on the NASDAQ or something. Yeah, NASDAQ. I've never heard of it. Invest Corp India Acquisition, a publicly traded special purpose acquisition company. It's a SPAC. So they're looking for an acquisition. Under the IVCA, which is the name of the company, all the shares in Bigtincan will be exchanged for shares in a newly formed Cayman Island holding company. Now, alarm bells are triggering right there in my mind. Cayman Islands, really? An implied equity value for 100% of Bigtincan fully diluted shares, approximately 400 million Australian dollars, or approximately 47 cents per share at the current exchange rate. The IVCA proposal also envisions a partial cash election opportunity at 23.5 cents per Bigtincan shares. Now, having gone through this announcement, so not an acquisition, what do they call it? A business combination proposal. Now, why is the share price higher than it is now? That's my main question. Share price is only 19.5 cents, and they're talking about this is worth 47 cents per share. Even the partial cash is 23.5 cents per share. So it sounds like maybe either I'm misreading something or the market is quite skeptical about this particular business combination proposal. Okay, so let's have a look at the chart for Bigtincan. And it hasn't been a happy story until recently. In fact, there was a takeover bid for this company on the 17th of September, and now the second one. But before that, share price going down and did hit a low of 10 cents. Yeah, it did hit a low of 10 cents. Anyway, that's Bigtincan, close to getting into my top 5 stocks today, but not quite. Viva, I was going to say Viva Energy, but that's a completely different company. Viva Leisure. Viva Leisure did make it into my top 5 stocks today. Share price is down slightly. They did release a trading update. I love trading updates. I wish every company released a trading update every single day. No, I don't want that. That would be horrible. But I do like when companies release trading updates on a regular basis. I just want to see how companies are performing. And a lot of times these trading updates can be the catalyst for re-rating in the share price, either to a high level or to a lower level, because we get a better indication of how a company's business is performing. So Viva Leisure, they own gyms or fitness centers. I wonder what they call it. Let's have a look at their about section. So apparently they are the leading and the fastest growing provider of health and fitness clubs. Okay, so they call them health and fitness clubs. I'm just going to call them gyms. So maybe I'm being a little bit too harsh on a Viva Leisure. To be honest with you, I don't like these type of companies. In my opinion, gyms and these sort of health and fitness clubs are not the best sort of investments. I probably would not invest, and we have seen quite a few of these sort of companies gone bye-bye over the last few years. Now, when I was a gym member, I only liked 24/7 gyms. I hated those gyms that were opened at 9 a.m. and closed at 5 p.m. or something stupid like that. I want to go to a gym when I feel like, and the good thing is there's more of those gyms around. I'm not sure if Viva Leisure has those sort of gyms. Anyway, strong revenue growth. They also, so it's up about 10%. Strong membership growth, up about 7.5% during the quarter. Now, corporate memberships are up 14.4%. So nice growth. But the question I had when I was going through this is acquisitions. How much more fitness and health clubs do you have now than 3 months ago? And I would like to see sort of like an organic growth. What is the organic growth like for these fitness and health clubs? Because they do mention here, grew from 176 corporate clubs to 190, added 14 new locations in the first 12 weeks of the financial year. So that does or will help. Plus Fitness Milestones opened 3 new locations during the quarter. Total Plus Fitness locations now stand at 195. And they did sell some. Anyway, so they're also doing a share buyback. And also released a bit of an outlook. It remains positive, with Viva Leisure expecting to increase its network by a minimum of 8 corporate locations. Now, to me, increasing your amount of locations is not necessarily positive. I want to see positive organic growth, and I want to see profit and cash flow increasing through time. Now, let's have a look at the chart for Viva Leisure. Is this a reason to get excited about this company? What does the chart show us? And in fact, if you look at the weekly chart for this company, I think you're going to see a company that's just not doing anything. Now, this company did list back in 2019, and just prior to the COVID-19, share price rallied pretty nicely. In fact, share price went from below $1 to $3 in about 6 months. That's a nice little rally. Then share price fell all the way back down to below $1. Then the share price rallied from below $1 all the way back up to $3.50 in a fairly short period of time. And that high was in late 2020. And since then, the share price has been struggling. This company has a markup of 139 million, P ratio of 39, slow growth in revenue, and the company's barely profitable. So that's not surprising that this company exists on fairly low margins. So that's one thing I'd be looking for if I examine this company's financials in the future. What are the margins? Are they expanding just a little bit? That's all they really need. Anyway, so not my favorite type of company. And if we have a look at the daily chart, nothing to get excited here for this company. So let's move on to company coming in, or 3 companies coming in number 4. Now, the reason I've lumped these 3 companies together is because they either have lost a CEO or they have gained a CEO. So let's start off with Collins Food. Share price down 1.2%. Appointment of Managing Director and Chief Executive Officer. I actually did have a look at this just to see if I knew the name of the person, because some investors will go where the talent goes. So if they really like a CEO and the CEO moves to a new position, maybe some investors will sell out of the old company and buy into the new company. So this particular CEO is called Mr. Xavier Simonet. When I actually did see that name, I thought, wait there, that does ring a little bit of a bell. Now, I did not know Collins Food was based in Brisbane. Go Brisbane. A highly experienced global managing director and CEO. And the most important thing is his history. So he's currently the CEO of Austrade, which is interesting, the Australian government agency responsible for the promotion of international trade and investment. He was previously the group CEO and managing director of ASX-listed Kathmandu for 6 years. There you go. So Kathmandu, then he went to Austrade. Maybe I'm being a little bit simplistic saying that. And now he's at Collins Food. He's also held management roles with Louis Vuitton, Moet Hennessy in Europe, Australia, and Asia. So he definitely has a bit of background in this space. He speaks English and French and has studied German. Master's degree in law, economics, and public administration from Institute of Politics de Paris. There you go. This man is well-rounded, international, and it seems okay. I don't mind this, but just remember, so he held position in Kathmandu. And the reason I say that, and the reason these companies are all linked is, no, let's go to Enero, this company first, Enero Group. So yesterday, Enero Group CEO steps down. Nothing much in this announcement. And to be honest with you, no big loss because this company has not really performed over the last few years. And this guy's name is Brett Scrimshaw. Doesn't really resign to pursue another opportunity. That's it. And I saw that and then moved on to the next announcement. And then today, so just remember his name, Brett Scrimshaw. And then today, KMD Brands. So remember, the new CEO had a history with KMD Brands or Kathmandu. And here we go. KMD Brands Group CEO succession. Ooh, who's the new CEO of KMD Brands? And lo and behold, they have announced the appointment of Brett Scrimshaw as its new group CEO. So Brett Scrimshaw has gone from Enero to KMD Brands. And Michael Daly has given notice to the board of his resignation, having been the group CEO since May 2021, an integral part of the Rip Curl business for over 22 years prior to this. Brent has been a director of KMD Brands since 2017 and global CEO of Listing Marketing Services, Enero since 2020. And then previous to that, he had 19-year career across 3 continents with global sports, footwear, and apparel powerhouse Nike. There you go. So it does seem like he could be good for this role. Interesting enough, I'm just reading the next paragraph down. He returned to Australia in 2013, and he held positions with Catapult and action sports company Fox Racing in California, in addition to KMD Brands. My only concern about this is Enero. Has he done a good job at Enero? Let's have a look at the chart for Enero first. And based off this chart, maybe not. Was this the right role for him? Because Enero Group is more like marketing, that sort of thing. And in fact, this is an ugly looking chart over the past 3 years. Share price has dropped from above $4 to $1.30. And to be honest with you, KMD Brands does not look good either. Yeah, it's actually in a downtrend similar to Enero Group. So, and just based off the market reaction, it's mooted. Both Enero mooted, KMD Brands mooted, even Collins Food mooted. Anyway, so 3 companies linked because of moving CEOs or new CEOs, CEOs going from one position to the next, but they're all sort of linked in a way. And those are the 3 companies coming in at number 4. And to be honest with you, I'd probably not buy any of these companies right now just based off the technicals. That's just me personally. Now, maybe you think that KMD Brands is really cheap, or maybe Collins Food is really cheap, and maybe there is a good value, maybe, or even Enero. Maybe there's good value with Enero. Now, the one thing about Enero, I just remember this because I noticed this yesterday. Let's go back to Enero. It's funny how the mind works. I just noted there was a big increase in pop-up in volume a few days ago. Well, that was last week. 25th of September, there was a massive increase in volume on that day. And then the next day, there was a pretty nice volume as well. And then the share price has rallied. So it looks like maybe someone is taking a position, maybe an institution, fund manager is taking a position. So that would lend credence that about $1.06 is a low in the share price for this company. The share price has rallied quite nicely, up about, we'll say about 20% since that low. Anyway, just remember that as I was just about to move on to the company coming in at number 3, and that's Findi. Don't want to be too biased when it comes to this company. I've held Findi for many years, and then this is the only company where I've exercised options. Yes, I exercised some options in Findi January this year at 90 cents. So that has been a nice 5-bagger for me, although I have taken profits. Took some profits, but the share price has kept on going up. But I'm okay with that because it was becoming a really big position in my portfolio. Anyway, so this company owns ATMs I was going to say ATM machines. That was redundant, or would have been redundant. They own ATM or run ATMs in India, hence Findi, Financial India. I'm assuming that's why it's called Findi. They've secured additional 638 ATMs with central Bank of India. Now, they did give a financial, what's the word? Financial benefit from this additional 638 ATMs, expected to increase annual revenue by between $5 and $6 million and annual EBITDA by 2 to 2.5 million. So that's a nice little deal. And they're going to fund these additional 638 ATMs through company free cash flow and bank facilities. I'd like to know how much cash flow, how much bank facilities, because if they funded all this through cash flow, free cash flow, that's the way you grow a company. That is the perfect use or perfect capital allocation decisions by management if they were doing that. Anyway, so let's have a look at the chart for Findi. And I've shown this chart many times. It's a brilliant, beautiful looking chart. I do have a price where I will sell my remaining companies or stocks, and that would be $3.40. So if the share price falls below $3.40, I will sell my position. And more than likely, I'm going to raise that. If the share price can remain above about $4.80, I think I'll raise it to that level because 480 is an important level. And the right is 480 important level. Just going to put a line right there. And the main reason, or that level, that zone, won't call it an exact number. You can see the share price rallied to about 480 back in June and July and then fell away. It rallied again back up to that level and then pushed through on some pretty good strength last week, 24th of September. Is that last week? Yep. Or is it? Yes. And then it pulled back, tested 480, and then has gone higher today. Now, it doesn't mean it'll remain above 480, but if it does, that would be a pretty good support level moving forward for Findi. So I do like when I raise my stop loss, a manual stop loss, not an automatic stop loss. But I do like it when I raise my stop losses when I do have this sort of company in my portfolio. It just means my returns for the company have increased. And I'm going to keep my remaining shares in this company until I see weakness in the chart. So that's Findi coming in at number 3. Now, coming in number 2, we have ArchTIS. Some sort of security, internet security, cybersecurity, some sort of company. Share price up 14.5%. It was up a lot more than this. In fact, the share price, 7.9 cents, reached a high of 9.7 cents. So I'm just assuming here, without even looking at the chart, that there is a bit of share price has been in downtrend and there's a lot of resistance. And that's why we have seen a bit of selling in this company. We'll confirm that when we look at the chart. Now, this company, ArchTIS, secures 2.3 million contract with Australian Department of Defence. Now, I don't know this company all that well. The only thing I know about this company is whenever I look at their Appendix 4C, cash receipts, that sort of thing, very lumpy receipts, so lumpy revenue, that sort of thing. In fact, I can confirm that. Let's just have a look at ArchTIS financial results. And here it is, ArchTIS financial results. What we'll do is we'll look at the last 5 years. We can't look at quarterlies. That's one thing I'd like to see in FinChat, quarterlies. And we have to go to income statement. So I'm assuming here total revenue has been increasing, but very lumpy. So let's have a look at total revenues for ArchTIS the last few years. And you can definitely see increasing through time, but quite lumpy. And the company did have $5.7 million of revenue 2.5 years ago, down to 4.1 million. But generally, revenues are increasing, but the company is not yet cash flow positive or profitable. Now, one of the reasons I do like these sort of announcements because this could lead to a burgeoning relationship with the Department of Defence. And if they can develop that sort of relationship, and that could be really beneficial for the company in the long term. So even though 2.3 million doesn't sound all that much, now the other thing is what's the time period of the contract? So total contract licensing valued at 2.3 million, AR increase of 276,000 1 year or year one, and increasing to 463,000 in year 2. Contract term expires in May 2028. So we are talking about almost 4 years. Inclusion of standard government termination clauses based on 30 days written notice of material breach of contract. But the most exciting thing about this particular announcement is who they're doing it with, Australian Department of Defence. Now, I'm pretty sure this company has something to do with cybersecurity. Let's have a look. global provider of data-centric security solutions for the secure collaboration of sensitive information. Oh, there you go. So in that sort of ballpark. Now let's have a look at a chart for ArchTIS. And has the share price been in a downtrend? Yes. In fact, yes. In fact, not as bad as I was expecting. Now I'm just going to have to auto fit. There we go. Now the share price has been in a downtrend for quite a while, but it looked like the downtrend had come to an end last July 2023. Share price sort of going sideways, but then the share price started to move back into a downtrend in February of this year and has fallen a fair bit. And you can see why the share price has pulled back a fair bit today. Reached a high of 9.7 cents because all these shareholders who bought at high prices, who haven't sold out yet, have seen the opportunity to get out. And there's probably been increase of supply of shares on the market because of those shareholders who want to get out of this dog stock. And that has led to a bit of a downward pressure on the share price. So the enthusiasm of the sellers has been more powerful than the enthusiasm of the buyers. And you tend to see that a lot in these sort of charts. Whenever a company does release a positive announcement, you will see the share price, more than likely, will see the share price pull back. If you don't, that means there's way more power to the announcement. The announcement is really good. Anyway, so that's ArchTIS. Yeah, not the biggest fan of this sort of price action. I do like the volume, but the price action, little bit disturbing. Let's move on to company number one, the top stock of the day, stock of October 2024, company called Hydration. What's it called? Hydration Pharmaceuticals company. I actually have used one of their products before. Hydration. So as a runner, they too produce some stuff you put into a drink that hydrates you. Not only hydrates you, gives you back those stuff you lose on the run. What do you call them? Those salts and whatever you call them. Anyway, so I have used their products before. Now, why has the share price rallied 144% today? They have divested of Hydralyte's non-US assets. And it's the price they received. And not only that, first of all, actually, what I should show you is, now, actually, so according to Market Index, the market cap of this company is 6.7 million. But if you look at, say, ComSec, the market cap is 3 million. The reason why there's discrepancy there is because ComSec market cap, TradingView market cap don't update in real time. Market Index does update in real time. So that 6 million is the real market cap of this company after share price has risen 144%. Before it had risen 144%, the market cap of this company was 3 million. So keep that number in mind. I'm also assuming this company doesn't have any debt, which could be a really bad assumption. Could be a really bad assumption. And now let's go to this announcement. Hydralyte, divestiture of Hydralyte's non-US assets to Prestige Consumer Healthcare and associated subsidies. Total proceeds of $9.5 million US dollars includes 8.3 million for all non-US territories plus 1.2 million for stock in inventory. The sale price of 13.7 million Australian dollars represents a significant premium over a HPC's market capitalization of 2.7 million as of yesterday. So even though share price has doubled, say it's 6 million, it's still well below the sale price of this particular divestment. So the company does retain full ownership of US-based operations, which are achieving analyzed revenue of $3.8 million a year, so not a lot. US assets have considerable scope to grow. So just based off the cash on hand, there is an argument that this company is now trading below cash backing. So if the company decided to wind up the business now, you'd get maybe a 100% return, even though the share price has increased 144%. Will I take a position in this company right now? Probably not. Probably not. But let's have a look at the chart for HPC. What's it called again? The Hydration Pharmaceuticals company. And we have seen a lot of ugly charts today, and this is another really ugly chart. I still remember when they listed, and I thought, why? That's my first question. Share price, when they listed, or just after they listed, went to a high of about 38 cents. Now it's 2.2 cents. And this chart is an ugly looking chart. Some okay volume today. not great. I'm going to keep an eye on this one, just see what happens. But it's intriguing that now this company has a significant amount of cash on hand and the markup is still 6 million. So cash could be 14 million, markup 6 million. In fact, I'm going to have a look at this company's most recent Appendix 4C just to see if they do have any debt. I do actually like Appendix 4Cs to look at debt because I know exactly where it is. So it's Section 7. Here it is. And the company does have a bit of debt. So $5.5 million of debt. Now, did they have any cash? Let's have a look. Not much cash. So I am assuming that this company sold these assets because possibly they had no other choice. They were burning through cash. And when I say burning through cash, receipts to customers, $3 million. Operating cash flow negative by $1.3 million. So they needed some cash. And I think because where the markup was $3 million or $2.7 million, raising capital would have been hard. And whether anyone would want to, any institutions or fund managers want to give money to this company, there would have to be questions about that as well. And they also have a bit of debt. So if you take away the debt, this company has enterprise value of about $9 million. So still trading below enterprise value. So it is interesting at these current prices, but doesn't mean I'll take a position in this company. Just because if this company was operating cash flow positive, I'm not going to say any more. Okay, so that is the top stocks of the day. Now, one stock I just want to see, one chart. Oh, yes. Okay. So I took a position in Delorean the other day, and I've mentioned time and time again that 10 cents is a really important resistance and support level. And lo and behold, I was following Delorean Corporation. I started following this company back on the 23rd of July. They released their Appendix 4C and it was really good. Share price on that day rallied 72%. Share price then dipped all the way back down. So on that particular day, the share price rallied to 10.5 cents. So went above 10 cents, came back, and then the share price fell over the next month all the way back down to 5.5 cents. And the share price started to rally again. So beautiful buy the dip situation here, and I missed it. And then the share price rallied. So some of this rally could have been on the back of their financial results. Share price rallied, I think that would have been on the 30th of August. Let me just check that. 30th of August. Yeah, they released their preliminary final report on that day. And on the 30th of August, the share price did increase 23.5%. And the share price closed at 10.5 cents. So it looked like the share price had broken above 10 cents. And then, in fact, the next day, on the 2nd of September, share price went all the way up to 14 cents. Then the sellers came in, and the share price was sold off over the next few weeks. In fact, the share price fell below 10 cents. And I went, oh, I like that the share price has dipped below 10 cents. So I decided to take a position at 9.8 cents. If I had a little bit more patience, I could have bought some shares at about 9.4 cents. That was low, but it's really hard to know exactly when the low is going to be reached. And then lo and behold, the last few days, the share price has rallied. Share price now at 11.5 cents. And I'm not going to call it just yet that 10 cents has been breached, but I do find this happens a lot. That 10 cents, when it is broken, that can be the floor on the share price. So I made an assumption that was going to happen with this company. And now the share price is 11.5 cents. You can see buyers at 10.5 cents, sellers at 11.5 cents. So it wouldn't take much to send the share price back down to 10 cents. So I'm just going to say that. Wouldn't take much at all. Not many shares, only 200,000 shares traded will send the share price down below 10 cents. And just look at the volume traded today, 332. If you look at the trade history, so you can see a really big increase in trades or volume on the 2nd of September and the 30th of August when they released their preliminary results. So there was a bit of interest on those results. And if you go back to July when they released their Appendix 4C, I don't think it was Appendix 4C. It could have been a trading update. Because on this day, 31st of July, share price down 22%. I have a feeling that was the Appendix 4C. So the 23rd of July was just a trading update. Share price up 72% on 29 million shares traded. I'm just going to confirm that. I'm getting some bit of memories coming back. Yeah, they released their Appendix 4C on the 31st of July, and for some reason, the market didn't like it. Not sure why, but previous to that, they did release a market update on the 23rd of July. That is the announcement that got the market excited. So again, it wasn't Appendix 4C or financial results. It was just a market update, a trading update. It is why I love trading updates, because you get a lot of information, and a lot of that information could be new information, could be fairly new information, and new information can move the share price significantly up or down. Okay, so I do have and that is the top 5 stocks of the day. And actually, no, that's the chart. One chart of the day. Now, I'm just going to have a look at some of your comments. So Marianne Delorean says, hi, Michael, discovered trading economics a few weeks ago. Looks good. I'm going to explore that a little bit more. It's good to see other people finding stuff. Rod Torn should do a deep dive into FHE. They announced a cap raise at 25 cents mark discount. So this recent sell-off takes it way past the reduced price for the cap raise. Now, I won't do a deep dive into this company right now. There is a trading halt. I don't know if I remember the trading halt. What's it for? Aired connection with discussions with joint lead managers regarding tranche 2 of the placement, announced on 28th of August. Now, based off the indicated price, it's not negative. Based off the wording, I would go, oh, that's negative. But based off the indicated price, the market doesn't think it's negative. So the chart of this looks ugly. Now, I don't know anything else about this company. So maybe the market has really gone too negative around this company, and the share price is down a lot. So there is potential the market has overreacted, but I have no idea because I don't know anything about this company. But there is that potential. So maybe Roger Dawn is probably right. Maybe I should do a little bit of a deep dive into Frontier. What's it called? Frontier Energy. Frontier Energy. So thank you for that recommendation, Roger. Maybe I will do that. Sensei. For some reason, I thought there was more comments. Sensei bought a heap of nickel industries years ago, pays a dividend as well. Didn't realize back then, so it's a bonus. SimplyWallStreet said its true value is $8 and now says $18 to $19. I would say don't necessarily believe anything a website like SimplyWallStreet says. Hopefully someone mentioned that. SimplyWallStreet is basically predicting the future for me so far. Which 5 stocks has it done best for you in the last 5 years, and what 5 you think it will be or do best for the next 5 years from your Wall Street hours? So I don't know anything about SimplyWallStreet, but when you do see any sort of target price or true value, just look at that with a grain of salt because, how do they calculate that true value? That's the first question I would have because I'll tell you a story right now. I think I've told this story once before. This happened in early 2023. Someone did a deep dive into Nvidia, and they did a DCF, and they said this company is significantly overvalued. In fact, not only did they do a deep dive, they gave everyone the numbers, and they did a 10-year future projection of free cash flow. I think it was also operating cash flow, either operating cash flow, free cash flow, and they gave us the numbers expected over the next 10 years. This person who did it was wrong within 1 year. No, I don't mean wrong within 1 year. Their projected free cash flow of Nvidia in 2033 was 10 years too late. They reached their projections within 1 year. So it is important to know how someone comes to a true value for a company. Maybe SimplyWallStreet is absolutely right. Maybe they're not. So your Freeman sounds like a fan. SimplyWallStreet is basically predicting the future for me so far. I'd like some proof for that. So thank you. Igor. Oh, this will be the last one. What are your thoughts on Helios and Platinum Management? They seem to have started an uptrend. Okay, I'll be honest with you. And I should be honest, for full disclosure purposes, I am trading Helios right now. So I have taken a trading position in this company. There it is, $1.65. My stop loss is around $1.55. If it falls through about $1.55, that would be negative, automatic sell. And it does look like share price is moving into an uptrend. In fact, I like these sort of uptrends. It's a very steady sort of uptrend, and I like it. So I'm in Helios. Now, compare that to Australian Clinical Labs. So even though Australian Clinical Labs share price has really taken off, it's just taken off way too quickly. And I would expect a pretty good pullback eventually for this company. So I do prefer a chart like Helios over Australian Clinical Labs. That's just me, because this is more orderly. It's nice. It's reasonable. And in fact, there's less likelihood that day traders are in Helios and over Australian Clinical Labs. Now to Platinum Asset Management. I'm probably not that keen on this one. Now, there was a takeover bid for this company. So that's why the share price popped up on the 17th of September, and they knocked it back. And maybe there's another bid, maybe? Yeah, so from Regal Partners, and they've knocked that back. So there is a possibility that's why the share price is rallying right now. But look at the chart for this company. It's been in a long-term downtrend, and I'm just skeptical about this sort of fund manager. They haven't shown anything that they're turning things around. That's my main thing. Now, maybe it's a mistake looking at that, and just instead of just looking at the chart, if I just focused on the chart without knowing anything about the company, and maybe that's the right way to do it, I would be probably a little bit more interested in this. I'd be definitely having this on my watch list. So let's do that. I'm going to have this on my watch list. I'm going to put this into my buy Australia watch list. These are the sort of companies I do follow a lot of the time. Every single day, I look at these charts every single day. So not a lot of the time, every single day. Okay, and that is all I have for this particular video. Sorry, I should do other. No, I'm going to keep it there. If you have any questions, any thoughts, leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.